what an intro there. Just getting Neil to put his air guitar down and to stop jumping off the furniture. Keeps climbing on the desk and jumping off and landing on his knees. Yeah, don't know if he meant to do that. He let out a simpering cry last time he did it.
I thought you had some hair in.
Said my knees. So good morning, Neil. It's Neil from the Risk Dashboard, and today we're talking about transport, quality, and card payments. Over to you, Neil.
Hi, good morning, Ian. Nice to see you again. Yes, so we're a couple of risks off the Risk Dashboard's platform with regards to some modules, and I've kept it short today. I'm just going to look at a couple of, an individual risk per module. Of course, our platform has a number of modules within the Risk Dashboard, up to 20, soon to be 21. So, transport. So, in a business, if you're running a fleet of vehicles, you need to understand whether you're screening vulnerable or high-risk drivers in your business. So what's important about the aspect of transportation risks in your business? That's what we need to understand here. So you need to ensure that an effective provision is made within the business to reduce any risks to an acceptable level. And the management and health and safety at work regulations requires that suitable and sufficient risk assessments are undertaken whenever a significant hazard might arise. And there's a number of ways in which to screen drivers to reduce these risks. But the easiest way to start is pre-screening the candidate's employment history and driving record. Has the driver got a current licence and have they any endorsements? Is the driver fit to drive? And this may include consideration areas such as health, fatigue, being able to satisfy eyesight requirements set in the highway code. Alcohol and drug abuse, of course, are there, and medicines that impair the ability to drive. In fact, when you look at driving in, it is absolutely riddled with law. So you've got to be really careful if you're running a fleet of vehicles. Of course, there's health risks as well. So the demand of drivers these days being placed on them by their employers could result in fatigue or cardiovascular or gastrointestinal diseases, caused by sitting down and driving for long hours, and the health effects caused by exposure to environmental pollutants. So you've got to be really careful when looking at your driver risks when it comes to transport. And as I said, there's a risk profiling link in our dashboard in our resources to managing health and safety, the HSE guidance, which includes profiling as an integral part of managing health and safety. There's the next question, of course, coming out of another module in quality. So we've got 14 questions in total in quality. Now, we think quality is important within the Risk Dashboard as a way of not only reducing risk, but managing customer expectation. But it's also important to understand, when it comes to understanding what your risks are, by not storing and managing and controlling documents. So question 3 in the quality module would be, have you identified what documents are important to keep in your business? And it's crucial to identify your documents and data to ensure that you have information in your business that needs to operate efficiently. One example of documents that should be kept are minutes, perhaps, of senior management meetings in which key decisions are made. But there can be many documents that need to be kept, and they will vary from business to business depending on your sector and size. If you're undertaking a task of identifying your organisation's important documents, you may want to approach this as a specific project, and the National Archives suggests taking the following steps. 1. Secure support from senior management. 2. Plan the project. 3. Do preliminary research. And 4. Work with each department or unit within your organisation. Of course, depending on whether you're a limited company or a partnership, there's terms and periods in which documents also need to be stored and kept. So if you're a limited company, accounting records for a minimum of 3 years from the dates they are produced. PAYE records kept for a minimum of 3 years to the end of the tax year and to which they relate. And of course, VAT records need to be kept for 6 years. So there's a lot, again, which is wrapped around legislation when it comes to storing documents in best practice, and that's what we're guiding our end users towards.
Now, given that we've got taxation, is a lot of the taxation things are now going digital, and there won't be paper records. The storage of digital records can be a bit hit and miss, can't it? If you've got a drive that suddenly goes down or something like that, and you could lose them. Are there any specialist provisions for storing that information?
Now, Ian, that's a very good question, and that comes back to previous discussions that we've had around information security and how you back up your data. And of course, the likes of the platforms helping the accountancy world, and in particular their clients, with the likes of Xero and QuickBooks, and the government's task of making tax digital. Yes, this really is reducing the paper aspect of what we need to keep. And if you're now storing your documents, certainly your financial documents on these platforms, they have a liability to their clients to make sure that they're also secure. I'm not entirely sure of what the time frame is. I can't see that being any different from whether it's paper or digital. It's still legislation on why you need to keep things for a certain period.
Right. Yeah. Okay. Well, let's give Neil a break, and we'll have a little bit of Coldplay.
Want to contact the studio? Tweet us at BRU Radio. Message us at BRU Radio. Email studio@bruradio.co.uk or text us on 07895 669929.
So we're back with Neil. Okay, Neil, so what's the last section for today?
So we're going to be looking at the payment card industry, Ian. So what we refer to as a 3-letter acronym, PCI. So the question 5 out of 15 in our dashboard on PCI is a very simple question. Do you have a secure sockets layer certificate on your website? I say simple because people don't quite understand what secure sockets layer means, SSL. So that's the type of certificate that provides authentication for a website, and it enables you to encrypt connected data. And these certificates communicate to the client that the web service host is demonstrating ownership of the domain and the certificate authority at the time of certificate issuance. So SSL, short for secure sockets layer, is commonly used on e-commerce sites. So if you're selling something online, your pages require to submit personal or credit card information. Now, I can quote and regurgitate numerous hacks which go on e-commerce websites, and it is a growing attack vector from those that are looking to steal information and data. But by ensuring that all data passed between two parties remains private and secure, SSL encryption can help prevent the hackers from stealing private information, such as credit cards or bank information, names and your addresses. And it also creates trust with users by verifying that websites that are used to track finances and make online purchases are secure and legitimate. So why do you need an SSL certificate? Well, an SSL certificate helps you secure information such as log-on credentials, credit card transactions or bank account information, and of course your personally identifiable information such as your full name, address, your date of birth or telephone, proprietary information, medical records. It goes on and on. And of course, as more consumers are buying online, cyber risks continue to evolve, but we covered that off in a different module. And understanding the type of SSL certificates to look out for, what makes a safe site, and the potential risk of online shopping, they're all very important. Now, the next thing you need to do when you have your SSL certificate, and if you're selling online, is you need to understand the risk of not doing something correctly. So do you actually do a quarterly vulnerability scan to validate your PCI compliance? Now, what businesses don't understand, that if you're handling card payment information, you are legally required to regularly scan and test systems. And few too understand that these are separate things. And a vulnerability scan it can be automated, it's high-level testing, and it's looking for potential vulnerabilities. So if you're selling online, Ian, as well as having an SSL certificate, you are legally obliged to check that your systems and your processes are secure. So there's 3 items today, or 3 different modules, or 3 questions I should say. So summarising what we've discussed this morning, the risks to a business of not screening its drivers could be considerable and costly, and as I said earlier, it's wrapped in legislation. And the importance of knowing which documents and records in your business and how long should they be kept is also equally important. And finally, if you're running an e-commerce business, the importance of SSL certification for validation, and that requirement to run a vulnerability scan, which is illegal, which most businesses are not aware of. And our penultimate session in a couple of weeks, we'll be looking at buildings, anti-money laundering and procurement and supply. So if you're an SME business and you want to understand more about the vulnerabilities and the threats and the growth, I have to say, and you want access to the risk dashboard, I would just suggest you get hold of your local Chamber of Commerce, or of course get in contact with your accountant. And you can find out more on my website at www.riskdashboard.co.uk. Thanks, Ian.
Excellent. Thank you very much, Neil. I forgot to put my microphone up. And right, well, let's do one of these.
Want to contact the studio? Tweet us at BRU Radio. Message us at BRU Radio. Email studio@bruradio.co.uk or text us on 07895 669929.